Nigeria's downstream sector at risk of monopolization, or are we simply witnessing a necessary market reset? Good morning and welcome to another power-packed episode of Business Week. This week, a member of Nigeria's central bank, MPC, is flagging risks in the country's rising debt profile. And meanwhile, some bank results for the first half of the year are out, with names like Zenith and UBA showing solid earnings. In Ghana, the central bank delivered another surprise rate cut to fire up growth, while in Brussels, EU ministers reached a critical milestone in shaping the future of digital currency. Meanwhile, Africa's manufacturers are lobbying hard for an AGOA extension to protect duty-free US market access, and AI's influence on global trade is projected to surge by 40% over the next 15 years. And in tech, a $5 billion investment by NVIDIA in Intel is also on the table, even as China bans the company's AI chips. We talk about the Dangote refinery, and we speak to a stakeholder group in Nigeria's full retail market about market dominance, pricing, and competition. All this and much more on the show. So if you missed the big business stories of the week, don't worry, I've got you covered. I'm Rolake Akinkugbefilani. As always, we'll take a look at global energy commodities, and you can see it's really all red week on week in terms of commodities market. So the big macroeconomic move during this week, of course, we saw in the US, the Fed 25 basis points rate cut, but it seems that wasn't enough to really jolt commodity traders' sentiment around oil markets, because it's a pretty well-supplied market. As we know, we've seen OPEC Plus likely to continue to increase production, rising US inventories, and Russia now saying it's going to increase production and sales of oil to India and China, following a move by the EU to stop Russian oil imports over the next few years. So markets, really, it's a toggle between supply and demand, but supply really having the day here with a sweep of red across pretty much all the benchmarks we typically cover. The biggest downward move was natural gas, which is down by 2.36%. Let's look at equities markets from Africa and elsewhere. First, we start here, of course, with Nigeria. The all share index closed the week up, weekly gain by 0.92% to end at 141,845.34 points. Volume of shares traded almost 500 million shares, but value was down week on week by 6.4%. Market capitalization closed the week at 89.7 trillion naira. Let's take a look at Africa. It wasn't such a bad look there, with the exception of the Nairobi Stock Exchange, which was down week on week by 2.9%. But Ghana, Accra here was up. No surprise there, because the Ghana Central Bank did cut interest rates by a whopping 300 basis points. And I'll be talking about that. And that really helped to drive sentiment on equity stock markets, with companies obviously anticipating lower borrowing costs. Johannesburg was up by 1.58%. Casablanca was up by 0.58%. Let's scoot over now to Wall Street. No surprises here. Although markets had sort of priced in a rate cut, but the response was even more interesting, positive. We saw all the key indices we typically follow in the US market were up week on week. Dow Jones Industrial was up by 0.5%, S&P 500 was up by 0.84%, and NASDAQ tech stocks. Big news here is the developments around NVIDIA, which I'll be talking about a bit later. So it was a pretty bullish week there for tech stocks, and we'll tell you a bit about why, in just a short while. Now to my top picks from around the world. We start, of course, with this development during the week by a member of Nigeria's Central Bank Monetary Policy Committee, who says that there are concerns around Nigeria's rising debt profile, public debt, which is a combination of domestic debt and external borrowing. Now, as at March this year, Nigeria's total public debt stood at about 150 trillion naira. We know we're facing a budget deficit of about almost 6%. Way above the fiscal stipulated benchmark here. And analysts are actually forecasting that that debt profile could rise to 160 trillion. So I guess the warning here is just really around fiscal sustainability and whether some of the frameworks and the rules we have in place have been enough, alongside some of the economic reforms we're seeing, whether it's FX stability, full subsidy removal, whether those have been enough to really help to improve Nigeria's debt profile. And this raises some concern about the sustainability of debt servicing, especially when it creates an opportunity cost for investment in other areas such as long-term infrastructure. So while it wasn't he didn't take an alarmist stance, but this is a necessary flag here for Nigeria's policymakers and the government to look at debt sustainability in the medium term. China has banned NVIDIA AI chips to the country, both in terms of testing of those chips for all sorts of technology purposes or the imports of those chips. Interesting here because China clearly trying to focus more on technology, independence and sovereignty. But was NVIDIA really moved? That company has just made a $5 billion investment in Intel's in the US, American chip manufacturer. If you recall some weeks back, the US government actually invested about $8 billion, taking a 10% stake in Intel. So Intel really shoring up its capital. Sometime in the last year, we also saw SoftBank invest about $3 billion in Intel's. And so is this a bit of a play between China and the US? So we'll see how that really evolves, but interesting dynamics there in the tech world, especially with artificial intelligence, semiconductor, and chips. China banning NVIDIA. Big news there. Ghana Central Bank has surprised with a larger than expected rate cut. So a 300 basis rate cut. So interest rates are now down to about 21.5%. In July, the central bank cut rates by about 350 basis points. So we're seeing a total of about 600 basis points of rate cuts since the start of the year. Now, partly driven by the fact that inflation has been coming down. It was down last month to about 11.5%. The GDP growth prospects of Ghana are looking pretty bright, with forecasts hovering around 6.3%, and further improvements in the outlook. Now, the government hopes to get inflation down to 11.5% before the end of the year. So this is really good news for Ghanaian companies, lower borrowing costs, hopefully helping to stimulate more economic activity, especially for SMEs. And we saw the impact on the Accra Stock Exchange there with the equity market closing the week on a significant high. Good news there for Ghana. EU ministers are charting a new path for the digital central bank, ECB central digital currency. Now, they have reached a landmark agreement that will see the legal agreement possibly signed in 2026. Now, this move is quite interesting because recently the US government under Donald Trump has actually banned the Fed from establishing any digital currency, citing privacy concerns. The EU deciding to go full steam ahead may indicate its willingness to essentially plug and hold that position as the main and most prolific digital currency hub in the global north. So we expect, if all goes according to plan, that digital currency will come on stream sometime in 2028. They still have a bit of a way to go, but this could significantly reduce EU reliance on payment systems such as Visa and MasterCard, mostly American-driven. And finally, the World Bank has launched and packaged around $500 million worth of loans through its private sector lending arm, the IFC, in a securitization move. Essentially, that means it is selling down tranches of its exposure to emerging market private borrowers to international investors, institutional investors such as pension funds and insurance companies. And this is part of a move by the World Bank to help the IFC really stretch its balance sheet a bit more and free up capital, as well as create opportunities for investors to take positions in emerging markets, which typically they've been very risk averse around because they haven't been able to find deals big enough and interesting enough. And so this is a way for them to, I guess, take an arm's length approach to investing in emerging markets. Now, there are about 57 companies in the portfolio that has been securitized to investors, mostly companies from Bangladesh, Brazil, Egypt, and other big emerging markets. So this may set the ball rolling on further securitization moves by the World Bank. That's it for our top picks from around the world. Around the world, we start in the US, where the Federal Reserve has cut interest rates by 25 basis points, its first cut this year amid signs of a cooling labor market. The Fed's benchmark rate now stands at 4% to 4.25%, reflecting a shifting focus from inflation concerns to economic slowdown risks. The World Trade Organization's 2025 World Trade Report predicts that artificial intelligence could drive up to 40% of global trade flows by 2040, transforming how goods and services are exchanged. WTO DG Ngozi Okonjo-Iweala urged countries to balance innovation with inclusion. She cautioned that without guardrails, AI could deepen global inequalities, much like previous waves of globalization. The WTO is pushing for multilateral cooperation to prevent a two-speed digital economy, one where advanced economies race ahead while developing countries fall further behind. The report highlights AI's role in logistics, e-commerce services, and digital manufacturing. Google plans to set up 4 major infrastructure hubs across Africa to support its subsea fiber optic cable rollout. The hubs in North, West, East, and Southern Africa will host landing stations and data centers for the Equino and Umoja cables, enabling faster, more reliable connectivity across the African continent. African textile manufacturers are lobbying U.S. lawmakers for a last-minute extension of the African Growth and Opportunity Act, AGOA, which is due to expire at the end of September. AGOA has provided duty-free access to the U.S. market since 2000, boosting Africa's exports, especially in apparel. Kenyan delegations, alongside 4 other countries, visited Washington last week to plead their case. Pankaj Bedi, a major exporter to Walmart and Target, warned that failing to renew the deal could cause factory shutdowns and widespread job losses in Africa's textile hubs. With global trade competitiveness already tightening, African exporters fear the vacuum left by AGOA's expiration could be quickly filled by rivals from Asia and Latin America. Meanwhile, policymakers in the U.S. remain divided, with no clear timeline for a renewal vote. Angola is unlikely to raise fuel prices soon as the government evaluates the impact of earlier subsidy cuts that triggered deadly protests. Finance Minister Vera Davis de Souza said the government is assessing whether sectors like agriculture and transport have become more efficient post-subsidy before deciding on next steps. Nigeria's inflation eased to 20.12% in August, down from 20.88% in July, according to the National Bureau for Statistics. This marks a 1.76% drop month-on-month and a sharp decline from the 32.15% inflation rate recorded in August 2024, a sign that disinflationary pressures may be building. Still on Nigeria, the government has suspended the 4% free-on-board import surcharge following pressure from the manufacturing sector. Finance Minister Wale Edun directed customs to halt implementation pending further review. The Manufacturing Association of Nigeria called the move timely, warning that the levy would have increased costs and undermined economic reform momentum. MAN's DG Segun Ajayi Kadir said the suspension would prevent widespread price shocks and disruptions to supply chains. The policy was one of several fiscal reforms being debated as part of Nigeria's push for revenue diversification. Nigeria's Dangote refinery has exported its first petroleum shipment to the U.S., marking a major milestone in the $20 billion project's commercial rollout. The 320,000-barrel cargo was purchased by global trader Vitol via partner Moco Oil and shipped aboard the Gemini Pearl. The gasoline is now headed to the U.S. distributor Sunoco, meeting international spec standards. Analysts say the deal proves the refinery's capability to meet global benchmarks, even as Dangote awaits final domestic licensing for Nigerian market sales. The refinery is expected to transform Nigeria's fuel imports, cutting imports and positioning the country as a regional export hub. For some Nigerian bank results, United Bank for Africa posted a profit after tax of 335.53 billion naira for the first half of the year, up from 316.36 billion last year. According to filings on NGX, UBA's gross earnings rose 17.3% to 1.61 trillion naira, driven by strong performance across major business lines despite headwinds across its African markets. And on to another bank, Zenith Bank reported a profit before tax of 625.63 billion naira for the first half of 2025, another solid outing from the Tier 1 lender. Gross earnings climbed 20% 20% year-on-year to 2.5 trillion naira, boosted by a 60% surge in interest income. This was largely due to strategic repricing of assets and treasury optimization, even with higher provisions following the end of CBN's forbearance regime. It also declared an interim dividend of 1 naira 25 kobo.